Hey, good morning, everybody. I swear I don't wear the same thing every day, but I feel like every time I do a video, I'm wearing a black shirt. But what can I say? It's slimming. Hope you guys are all getting prepared for the holidays. I just wanted to give you a quick update. Markets have been doing exactly what we expected, meaning that inflation is continuing to go down. We're starting to see some improvement in the rates. We are going to see profits being pulled from the investors, and I can go over that in a minute. But I really just wanted to share you through this video. We picked up about 90 basis points this morning, gave about 40 of those back, but interest rates are better by about a quarter of a point today. And I expect they're going to continue to go that direction. So as this continues to speed up, that we see rates getting lower and lower, it's just more sign that people are going to start competing over properties again. And the faster people can get into something now, potentially getting some seller concessions to do 2-1 buy downs, add that to the free refinance that we're offering. We're really doing everything we can to put you guys in the best position to sell to your clients and to put your clients in the best position to get into a property now before property values start to go up. I did see and share something this morning on Facebook that was pretty interesting, and it had to do with where I'm looking it up right now, so don't think I'm not paying attention. It had to do with a property as an example. Redfin purchased this property in May of 22 at 675, listed it in July for 725. Fast forward to November, it had been reduced to 499, and it just closed on Friday for 460. So that's a great example to share with people. And I know that buyers are scared right now, but man, I don't know if there's a better time to buy than right now. So hopefully they can figure that out as well, and hopefully this information helps you out. I know it's a long video, but if you're nerding out on stuff like this, or even if you don't, this is one to pay attention to, because it's continuing to show that the stuff that we're getting from MBS Highway is real, and that they're trending in the right direction. And rather than me try and put this together in a really pretty social media video like other loan officers, I'm just going to show you right from the horse's mouth. So let me share the screen and we'll get it going. Hopefully this is helpful.
Good morning, everyone. Yes, indeed, it's a beautiful morning with mortgage-backed securities up about 90 basis points. That's great. 10-year Treasury's down about 17 basis points. We'll check on that in a minute. It's a great start. Beautiful morning, and it's all due to inflation numbers coming in really exactly where we had expected. You know, when we gave you yesterday's update and we were talking about this, here's what Dan had told you.
So the estimates are for the year-over-year core rate to drop 6.3 to 6.1%. But if you remember, last month's inflation report had a big spike in lodging away from home, which was up 4.9% in the month, a little bit of a vacillation higher. Oftentimes, this thing goes up and down. If we see that come back to earth, you could even see it go down to 6%, which I think the bond market would really enjoy.
Coming in exactly at that 6% year over year in core, I've got to tell you, you can scour everywhere. No one had called for that. The reason was because of that little thing that we told you, that shelter away from home, which was an anomaly that we discovered. That it was up by 4.9% the previous month. We thought it would come down to earth. Sure enough, it did. It was actually down 0.7%. That was enough to give us just a little extra juice, bringing the year-over-year core number to 6%. In fact, let's take a minute here and let's break down the numbers for you. I've got a chart to make it a little easier to follow. So when we look at the headline number, pretty tame, up 0.1%. The core up 0.2% for the month of November. Now that brought the year-over-year numbers down on headline pretty significantly. It's a big drop, 7.7 to 7.1. We know this is too hot, but look, it's definitely a move in the right direction and taking a big step in the right direction, big jump in the right direction. And the same thing with the core, moving down to that 6% reading. Now, if you look at these numbers and you would annualize them, very, very low. This would give you like 1.2. This would give you 2.4% inflation, right around where the Fed wants it to be, but it just 1 month. Now, as we look at more of the internals, even though this was only up 0.2%, there was a lot of pressure in the core from shelter. We know that shelter makes up 39% of the core, and look at this. It was up 0.7%. So 39% of what went into this was from this. So you can imagine everything else had pulled it down. A rents were up, owner's equivalent rent was up, but here we go. That lodging away from home was actually down 0.7%. This was the one that was up 4.9% last month. So as we take a look at these numbers and we see shelter, it's up 7.1% year over year. Now that is coming down, but remember I told you that this is pressuring the core rate up. You can see that this is 0.7, this only came up 0.2. So 40% of this number has been pressured higher. So you can imagine how much everything else is dragging it down. When will shelter start to help us? Well, it's kind of something that we're going to take a peek at in a second, but you can see here as we move forward now, we got through November, December and January, actually better comparisons from December of 2021 and January 2022. We're in a position where we could get some additional help to the downside, but that roller coaster, it gets tricky because on the shelter component of it, we know in real time, this is real time, it's coming to a level where the amount of pressure is heading lower. There's less pressure, it's decelerating. So this will eventually be a benefit. But the way it's measured in CPI, as I told you, it's up 0.7%. This is pushing CPI higher. The trick will be to get past January. January will be the apex where you'll get the most pressure from shelter costs in the CPI. After January, so that means February, you get the number in March, all of CPI shelter component will start to be an aid. It will start to help us see CPI come lower. So you'll get faster declines in inflation. So this is what we're waiting for. Hopefully we'll get some good gains. We've made some good progress. But Dan, there's some other news as well to talk about this morning.
We got the NFIB Small Business Optimism Index for last month. While the overall index increased slightly, it's still well below the average or the norm. And when you look at the internals,
It's Mark's.
I'm just gonna fast forward to the charts.
Light up, and we're up 67 now, so it's vacillating, but very nice gains, of course. You can.
If we can pop above this, we're gonna see even better, or sorry, if we can hold that floor or that ceiling, we potentially can get to a big range here, which would probably be January, February, based on what they were saying.
See, we were higher here, so we're coming off those highs, but I want to start with the 10-year treasury. And the 10-year treasury right now is battling the 100-day moving average once again. This is actually a little evening star pattern if it holds, off of a little bit of a rally, but it does suggest some improvement down the road. As Megan.
Not to mention the good thing about this is there's so many different levels of floors and ceiling here that we're going to be ranging. So we should stay within this rate range for a little bit. We shouldn't see any major fluctuation. Unless, of course, there's investors taking profit.
That 30-year bond auction at 1 p.m. Eastern could just be the catalyst to give us a little bit of a rally if bond traders start to believe inflation is now really coming down as we see it. When we take a look at mortgage-backed security, we're down to 345 on the 10-year, by the way, folks. We take a look at mortgage-backed securities up really strong, breaking.
Again, if we can just break through, and these run opposite of each other. So if the 10-year actually breaks through to that floor, then we're likely going to see this break through the ceiling. And you see there's not as many levels holding us back here. So we have the potential to see a lot of improvement. Like I said, in the next couple of weeks to a month, I think everything is starting to kind of work out our way. So I'll stop sharing this because I don't want to bore you. Please call me if you have any questions. I know that there's been a few of you that have been, a little bit curious about how does this really work into real numbers. It's really case by case. So if we have a file that we're working on now, we're staying in touch with them on a regular basis. I've got 10 people here that I've got to follow up with today. Let them know where rates are at. Again, I am going to give them as much information as I can, and also tell them that if it were up to me, I would continue to float, but that's their decision. Either way, if you have new clients that we haven't talked to and you want us to get on the phone and I can dumb this down to really explain to the layperson that, this is what this market looks like. This is where it's probably going to go. This is what your best opportunity is. And likely it is to buy now. That's going to be the message we can get across to them. And we could probably even have them into a house, maybe even by the end of the year, which will help out with some tax stuff too if they're selling. I don't know if they have the ability to sell that fast, but it's all good news. So hopefully you guys are doing great. I know we've reached out to most of you to try and get together before the holidays. I really appreciate the business more than you know. As most of you know, we have a saying here that we only work with cool people. And we appreciate you guys as being business partners and friends. And we're looking forward to a fantastic 2023, which hopefully we are all very lucrative and busy, and it works out in our favor. Hope you guys have a great day. Talk to you soon.